To Mark Bayley from FIIG Securities. Mark, hello to you. Thank you so much for joining us. Certainly, we are watching UK Prime Minister Theresa May, one of the first sort of global leaders to be visiting Mr. Trump. What will we be watching from that? Certainly a few headlines one can expect.
Yeah, good morning, Natalie. I mean, it's going to be really interesting in terms of that meeting over in the States between Trump and May. You know, obviously Trump in terms of his rhetoric as well, saying, look, we're going to protect our US economy, our US jobs, and, you know, we're going to create wealth inside the US. So that's going to counteract and counterbalance Theresa May, who's looking for a trade deal with the UK and the US. So it's going to be interesting to see how they reconcile those two viewpoints, and especially, you know, given the retail sales data that we had out of the UK on Friday, which was very, very disappointing for December, which is obviously a key month around the world in terms of Christmas sales and more broadly in terms of the annual sales figures. They came in at -2%. The expectation was -0.4%, and in addition, November's figures were also revised down. So maybe that's the first signs that kind of the Brexit impact on the UK economy is starting to come through. So it's going to be really interesting in terms of what May has said, and she's talking tough. She's saying, look, if there's anything that she doesn't agree with that Trump has to say, she's going to stand up to him. She's not going to be bullied. So again, it's going to be a very fine balancing act that she's going to have to go down, a very very fine tightrope that she's going to have to walk down in terms of trying to get that trade deal, or at least have that positive communication and a positive outcome to the meeting when Trump is actually still talking about protecting the borders and protecting the US economy.
That fall-off in consumer spending when it comes to the UK economy, certainly a concern if we consider the key role that spending has played in the UK since that June Brexit vote. Certainly interesting also, I guess, on both sides of the pond when we consider that we have both US and UK GDP numbers out this week.
That's right, and again, you'll get an indication in terms of, especially from the UK, again, further impact of Brexit. You know, whether you are seeing those exporters benefiting from the lower sterling, and you know, to see whether you're still seeing that positivity coming through in the numbers. In the States, you know, it's probably too early to get any kind of read in terms of Trump's policies and the possibility or the expectation of what those policies are likely to mean for the US economy in terms of those figures. But again, I think the consensus is for a fairly strong print out of the US, and that's certainly what the market would be expecting. So any kind of slowdown there that you do see is obviously going to cause concern. But again, you know, we still have to see some of the policy directives that Trump is going to deliver. You know, in the inauguration speech, it was very, very full on rhetoric, very full on comment, and you know, he was going back to the themes that he talked about in his election campaign. But again, very, very fine and little on terms of policy detail, and that's what investors are going to look for. You know, hopefully he's not going to be all talk and no trousers. You know, he's actually going to be able to deliver on some of these policies. He's said that he will do, and that will start immediately. So the next couple of weeks are going to be critical in terms of setting that timeline and setting that time frame in terms of enacting some of these policies that he's talked so much about.
Certainly in terms of market reaction, we did see US Treasuries falling from 2.5-week highs on Friday after Donald Trump really adopting somewhat of a more populist tone. This has raised concerns, Mark, that we could see fiscal stimulus efforts being somewhat delayed. I mean, how much is that Treasury movement acting as a, I guess, litmus test?
I think it's critical. Probably that's the second indicator that you would look to behind the currency. I think in terms of, you know, fiscal spend and what Trump's actually saying. So, you know, look at the currency first. You'll get the major reaction there from the US dollar, then US Treasuries as well. You know, they were largely unmoved in terms of the trading on Friday, kind of around about that 2.47% for 10-year Treasuries. In terms of, you know, going forward, I think the key indicators, as you rightly point out, GDP, and in terms of that fiscal spend, it's going to take a long time for that to come through and actually impact the real economy. So obviously the market will trade in terms of any expectation or any detail that we do get in terms of what he's going to spend. And he was talking about, you know, building bridges, building roads, new airports, new railways, a lot of infrastructure in terms of his inauguration speech as well. But again, you know, we have to wait and see how he's going to do that. whether he's going to get the backing of the Senate and also Congress in terms of those policies. And also, we've got to not forget that he is against the debt ceiling, which again should probably be raised quite easily. But again, if he does go too hard on the fiscal spending, then he will be penalised from the so-called bond vigilantes, which will increase those treasury yields and cost the US government more for their borrowing and charge them a higher interest rate. So it's a very fine balancing act that he has got to do, but he has to start delivering some policy detail, or I think investors and the more broadly, the electorate is going to get disillusioned very, very quickly.
Just lastly, before we lose you, Mark, I just wanted to get your take on Friday's GDP number from China. It seemed to be a relatively mixed outlook. Whilst the number did fall within government target, it was also a 26-year low. Now, for some, if you hear that figure, that does sound quite alarming, but still the government is satisfied that this is highlighting stabilization.
I think that's the case, and I think it was actually the GDP figure was actually slightly higher than consensus. I think it came in at 6.8 versus 6.7 according to Bloomberg. So again, it is slowing down, and if you look at those figures in terms of the 20-year history, but what you have to remember in terms of the absolute size of the Chinese economy, it's substantially bigger now than it was 20 years ago, 5 years ago, 10 years ago. So the natural course of progression in terms is to slow down in terms of actual growth, but in terms of actual nominal and absolute figures, it's still growing very, very strongly. And even if the GDP growth does fall to 6% or between 6 and 6.5%, yes, it is slowing down again, but it's still an enviable position that the most of other countries in the world would quite happily take 6% growth. And I don't think that's going to see a significant impact more broadly in terms of global slowdown. It's still going to be the major source of global growth, and it's going to be interesting to see how the US plays its role with China in terms of trade and what it's actually going to negotiate there, and how that's going to impact both China and, I guess, to a bigger extent, the United States going forward. So, yes, the headlines do look weak if you look at them in a historical basis, but you've got to remember that the Chinese economy is now substantially bigger than it has ever been.
Mark, we will leave it there. Thank you so much for your time.
Thanks, Natalie. Have a good one.